Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. It's a beautiful day here in Denver, Colorado. Not that that's uncommon, obviously, but I am pleased to be here and joined today by fellow coach, my friend Brent Moores. Good morning, Brent. How you doing today, sir?
Doing great. Glad to be on with you. Beautiful day here in the Salt Lake area as well. It's it's good to be here. Good to be talking the markets in a kind of a holiday shortened week. So we all have July 4th coming up on Friday, but half day, by the way. Markets close early tomorrow as well. Just a reminder, but we got some stuff to talk about today, though, Kev.
We sure do. We had a very busy day yesterday. I can't help it, Brent. I'm already looking forward to the day and a half off, if I'm being quite honest with you. I'm excited to take a little bit of a breather following another breather last weekend. But we're not gonna divulge there. What we are gonna do is move into a bunch of charts and look at what things are moving around. Like Brent mentioned yesterday, with regards to yesterday, very busy day. A rotational move is what it looked like. We've got some heat maps to check out. We're gonna look at a bunch of charts for individual sectors as we do this. So plenty to get to with all of you. We've got Scott Thompson in the chat this morning, so say hey to Scott. He, of course, is going to monitor and reply to comments and questions that Brent and I are unable to get to. But you know we like hearing from you, so please feel free. Continue to post in there for the duration of the show. We'll go about 45 minutes, and Brent and I will happily bring your questions into the discussion as we work through it. Additionally, make sure you're following the three of us on X, please. You can do that at Scott Thompson CS, at Brent Moores CS, and at Kevin Horner CS. Good way for us to engage with you outside of these classes. So if you'd like to do that, follow us there. We try to post for you throughout the week as well. All right, let's cover our disclosures and we'll get into the good stuff for all of you. Please remember that our discussion here is exclusively informational and educational. We do not make recommendations nor endorsements for a specific approach to trading the market. We do talk technical analysis in this class, though. We remind you that technical analysis is just a piece of the puzzle, everybody. We encourage you to think of it as that. In fact, when you are basing your decisions, it makes sense to incorporate multiple data pieces in doing so. But essentially, we don't want you to rely exclusively off technicals for 100% of your decision making. If you're new to this particular class, this is our agenda. We do start broadly. We look at the largest groups of the marketplace. So we'll start with the S&P 500. We'll then move into the NASDAQ 100, the Russell 2000 in our top-down approach before moving into today, I think, some futures symbols as we look at some categories of the market that we don't hit every time. But we'll also get into sectors movement today as well. As I mentioned, I've got some heat maps from yesterday that I wanted to look at, both the S&P and the Russell, some notable shifts in how things were moving around just yesterday. So plenty to get to with all of you. Remember to use that chat as we work through things here. Brent, let's get started with the S&P 500. Boy, Brent, we just continue to stay lofty here above that 20-day moving average. Doesn't look like we're getting anything but confirmation of our recent move to new highs.
Yes, absolutely. So boy, there's a lot to talk about here. That's an all-time high. That label on the chart, shows a one-year high, but that is an all-time high on the S&P 500, by the way. There was a question of, hey, were we going to break above that? Well, we broke above that. We have a trend, a strong trend. That's that orange line on there, the 20-day moving average. And that, in the midst of the trend, we have kind of this classic flag pattern. The index goes up, it rests a little bit, a little pullback, goes up, rests a little pullback, has a little pullback. And most recently, it's gone up, and it seems like, well, the last couple days, we're not going down a lot, but we've basically just kind of breathing a little bit right now. Now, that's no guarantee it's going to continue to go up. Obviously, some of this is data dependent, or we'll say, news dependent. And in fact, we have a jobs report tomorrow coming out that certainly could move the market. And obviously, there's myriad other things that can move the market. But just from the technical standpoint, this is setting up for a kind of a classic flag pattern setup. Not a guarantee the future, but it's generally considered to be more of a bullish technical pattern.
Yeah, that's right, Brent. Exactly what I'm seeing as well. Given the movement that we're looking at here. Are traders going to be finding any other level of support? I mean, could we use a 10-day moving average perhaps if they wanted to ride the most recent breakout? I guess that's a possibility, right?
It's a possibility. Most recently, though, I would say we did bounce off of that 20-day. So to me, the 20-day kind of makes sense there. But
Sure.
yeah, you look at the 10-day. Look, we've been above that 10-day moving average since mid-April. Yeah, mid to early April, which that's a strong moving average if you're
It
above
is.
the 10-day for that long there. And so, hey, just because we identify support levels or resistance levels at certain areas, it doesn't mean the market has to bounce off those levels. It can kind of find its own level at some point, regardless of the moving average. And let's be honest, you could just run through a moving averages and put in a 1-day moving average, a 2-day moving average, a 3-day moving average, and so on, and find something that it bounces off eventually. But we kind of use these standard levels. But right now, I'm not. I don't. It doesn't need to come down to a discernible moving average or support line in order to bounce. You could also, by the way, draw a line. You drew the line off the highs that we had, better part of a month ago, I guess. You could also say that high that we had in February maybe is a potential support level as well for that. And so, we'll see. Time will tell, I guess.
Yeah, it's true. We could always fall to a standard horizontal level. We field that question so often, don't we, though, Brent, about which of these moving averages is the one that matters?
Yeah.
And I think the best answer is commonly the one that appears to be most respected by the instrument itself, right? And when I put the 10-day up, we saw deviations. We saw closes below the 10-day. What we haven't seen is a close below the 20-day. And I did the math on it when I drew that line. It tells I didn't do any math. Who am I kidding? We all know. We just look at the number, everybody. The number in the bar here in that box, 49 bars. That is 49 straight sessions closing above the 20-day moving average, closing in on 10 full weeks of action, Brent. That's getting a little lengthy, but we often say trends, whether strong uptrends or strong downtrends, they can continue a lot longer than you would expect. This is getting into that a lot longer than you would expect window of time, sir. Would you agree?
Yes, but hey, look, the market often does things that I don't expect, which is why, which is why you don't try, which is why you need to be cautious in anticipating, in making whatever your narrative is for the market, bullish, bearish, whatever, and being dead set on that, because I'm wrong all the time. I know others are wrong because the market just does its own thing. Now, we use technical analysis to help us on that, but the point is you don't get married to your forecast on this. Does the market look a little bit overextended, perhaps, from the technical standpoint? Maybe even from the fundamental standpoint. I posted on that. I retweeted something yesterday on maybe it's not a retweet anymore, Kevin. I don't know what you call it anymore, but reposted something on X yesterday on overall market valuations as well. That so from both a technical and fundamental standpoint, but I think the traditional technical approach is, hey, look, regardless of if it looks kind of extended, we're not going to anticipate that to the extent that we're just going to necessarily make a bearish play on that. Although, as we talk about very often, Kevin, it doesn't mean you may not tweak your positions a little bit, maybe take a little bit off of, take some gains off or move a stop up or things like that to be proactive in terms of trying to protect yourself.
It's a good reminder, right? There's if you've been investing a long time, you might feel like the way to be trading is, the market's too high, therefore I'm going to take bearish positions, or I'm just going to bet against what I'm seeing in the marketplace. That's a commonly a fool's errand. What I think we need to be reminded about is the idea that you can be bearish while maintaining your longs. You can be bearish simply through generating more cash, reducing the size of the longs.
Yes.
And you're not necessarily taking bearish positions. You're just pulling back on the level of aggression you have on your long positions, on your bullish positions. That's another step that will help a lot of traders manage that emotional application to their portfolio, right? You don't have to bet against the market to be bearish. You can be bearish by simply building cash, reducing position size. There's nothing wrong with that. And, again, if you're struggling with that kind of a concept, everybody, then try to stick with leaning into what is the current trend and go with smaller positions. I think that's the first thing that a trader learns is understanding their real risk tolerance. The amount of money that you can put on an individual trade where the machinations day to day, week to week don't really bother you. When you find that, well, then you may have found your true risk dollars, that you're comfortable with, I think. So I think that's a good way of at least of thinking about things and kind of, giving yourself something to build your playbook with, right? So,
Yep.
Brent,
Kevin, let me just mention one thing.
Yeah,
there was a question in the chat from Carol, and Scott actually kind of addressed the question, so I appreciate you, Scott, on that. Question was, and for those of you who aren't watching on the chat, I alluded to the jobs of the non-farm payrolls report on Thursday, moved up because of the holiday. And Carol was asking the difference between that and the ADP report. And Scott gave a great explanation on that. ADP focuses just on private sector. I'm bringing this up because I think it's a good question for everybody. The non-farm payrolls report reports both on private and public. Number one, which is going to move the market more? Typically, the non-farm payroll report is the bigger report. It's the one that the market tends to focus on more. Now, if one varies significantly, and this is true for almost any economic report, the more it varies from what's expected, that's probably going to have more impact on the markets as a whole there. But anyway, I hope that helps on that. Typically, though, the Thursday number, this non-farm payrolls number, would be the bigger of the two. Anyway, let's go ahead, Kevin.
So, Brent, I just because we're looking at the S&P and we are going to move on to the NASDAQ 1 second here, I just wanted to pull up the SPX heat map from yesterday and just highlight the rotational aspect of yesterday's price action. Essentially, we got a flat day on the S&P yesterday. We're closed pretty close to our open. But when you look at the money moving around, the red is all applied to the stuff that had been leading us along the way.
Yes.
Technology, red. Communications, largely red. Discretionary, still green, but it had the big red one there in the middle of it all, Tesla. But the greens really stood out yesterday. All of those laggards for the last 2 months have been bouncing as of the last day when we move into Q3 here. I think we had to make note of that. Look at financials down in the lower left. Look at healthcare in the middle center, or right center, staples off to the right. And then all of those other defensives, Brent, energy, utilities, real estate, materials. Very notable day yesterday in the S&P.
Yeah, a lot of breadth yesterday. I posted on X on this as well. A lot more gainers, advancers than decliners yesterday on the S&P 500. It was like 3-1 or something like that. But some of those big names, NVIDIA, Microsoft, Broadcom, Meta, those Tesla, a lot of those bigger boxes were red. And a lot of those bigger boxes are, especially in like the IT area, are the ones that, to your point, had been moving the market. But it is, you can't have a market where, well, I guess you can, but generally we don't like to see a market where only one sector just drives it forever. At some point, you want to see some more participation from things like staples or energy or financials, materials. And so it's not a bad thing to see the market being led, so to speak, by the smaller companies and not always just in IT. That's what happened yesterday.
Yeah, and it was the thing that we're gonna look at one other thing here, Brent. Let me bring up this as well. This is our friend Rachel's chart that she brought back a few months ago, and it's a wonderful reminder of ways to evaluate the overall market as from a standpoint of breadth. And notably, Brent, the first two levels up above, the stocks above their 200-day moving average, stocks above their 50-day moving averages, both of these have moved well to the upside. Notably, the 50-day moving average, the highest we have seen since September of last year, and stocks above the 200-day, we're moving into the highest we have seen this year. So we are getting back to a point where the rally is broadening and widening. That's not a negative, regardless of the day we may have had with tech yesterday.
That is absolutely true. If you look at the number, and that's that the numbers on the y-axis or the price axis, so to speak, is a percentage there on that. And on that S&P 500 one, that was down, if I remember correctly, to 0.04 back in early April. That's how, in other words, 4% of stocks above their 50-day moving average at the beginning of April there. Now 76%. That's a huge move in the market, just showing the broad participation in this market rally. That's from a bullish standpoint, that's a good thing.
Exactly. And I'm going to go ahead and make this note. I did share that in the chat for all of you, this particular grid, if you would like to have it, everybody. So you can copy that grid that Rachel provided us and upload that to Thinkorswim on your end. I have to point out, of course, grids that we share here, these are not a guarantee for their accuracy nor their timing. They are not a recommendation for use. But you can absolutely utilize this if you might like. Now, Brent, let's move back. Let's check out the NDX before moving into some small caps. But the NASDAQ yesterday, I saw it from here just a second ago. BJ was commenting, hey, show me a flag pattern. We had one on the SPX. We might have a short-term flag posting here as well in the NDX, Brent.
Yeah, I don't know what to say on the NDX, Kevin, because it looks really similar in my mind to the SPX here. When we looked at others, it will look a little different here. But on this one, trend up. We reached all-time highs a couple days ago. We've had these flag patterns, a little bit of a pullback right now. And, this shows obviously this, the similarity between this and the S&P 500, but also we can extrapolate a little bit further and say this is probably one reason why the SPX looks like it does. When we say the SPX has been led by IT, communications, things like that, well, that's a big part of the NASDAQ, and therefore you can see the influence of one upon the other in that regard. And so, yeah, this looks a lot like the S&P 500 right now, including on that RSI, by the way, at the top of the page. We kind of reached into that overbought area, dipped down just a little bit below it. We saw that. We didn't point it out, I don't think, but we saw that on the SPX earlier.
Yeah, not a negative, right? I mean, you're going to get a dip on the RSI below the 70 line after getting above it. At some point, commonly the thought is that a break on the RSI back below the 70 line after being above it can be a short-term sell signal. But a break below the 70 line on the RSI after breaking above it and making a higher high with price making a higher high, do not expect that the RSI is talking about a reversal there. That is not what would be the takeaway. Okay, the takeaway, excuse me. So the levels, everything remains the same. I mean, everything we said about the SPX applies to the NDX here because they have been moving on the same trajectory. They both recaptured the 20-day moving average on April 23rd. They both have closed above it every day since. So again, we don't have to get cute here. If we just are trend traders, we can work with the trends that are being held here. I think that makes a lot of sense for a lot of intermediate to short-term traders in the near term here. So, okay. Let's peek in on the small caps. The Russell, like we said, Brent, had a good day yesterday, man. We moved upward. Great. I mean, at one point, that candle could not have looked any better. Got a little bit of profit taking near the close, but ultimately above the 200-day, above that ever important ledge here at around 2175 or so. So we might be looking at day one heading into day two of maintaining a new moving average level over the 200-day.
Yeah, we're not at all-time highs on this. This does look a little different, but we have seen strength in the Russell, the small caps. they have they've underperformed, but of late they've actually been on par, I guess I would say,
Mhm.
with the large caps, which maybe maybe that's a good sign economically, just from the standpoint of this. The most common explanation of why small caps were lagging when the rest of the market was going up is small caps tend to be often smaller companies, little less, strong balance sheet, more susceptible to higher interest rates, more debt on the company, and so a little more iffiness on some of those companies, on the financial strength of those companies, and that's why they had underperformed. And yes, they have underperformed of late. The last month or two, they've actually done fairly well and held their own, so to speak.
hmm we could also note, Brent, they've done exceptionally since we broke the downtrend line right around middle of May, right? We've
Yeah.
maintained the 20-day and kept climbing. So the fact that we've achieved the 200-day for a lot of traders is notable. I guess the question is, when is the trader going to grab some semblance of confirmation, right? Are we going to get that from the RSI moving higher, RSI getting into overbought conditions? Could it be 3 closes above that level? I mean, you're going to get a shot at day 2 today and then a half day on tomorrow. That could be, by the end of the week, 3 consecutive closes over the 200 day. That could be a window where some traders are going to start off feeling a little bit more optimistic and bullish, at least as it relates to the Russell.
Yeah, so and if you're a trader, that traders often like to see the confirmation after a move, and you can look for numbers of days above it or a percentage above it or whatever. Everybody has their own rules on that. But right now, I think the short-term strength has been undeniable on this, which I think is a good thing for the just if you're viewing the overall market. Of course, that's no past performance is not a guarantee of future performance.
As as we know,
Yes.
unfortunately, if it were, my goodness. Hey, let's look at the heat map from yesterday as well on the Russell, which really illustrates the move in financials. And once more, I mean, just speaks to how we need to understand the component makeup of these groups. We can't overthink it, meaning, hey, why didn't we get a phenomenal day out of the NASDAQ? Well, because the NASDAQ has extremely limited exposure to financials and to healthcare. These are companies that you'll find in Russell and in S&P, but it's a wonderful reminder that knowing the component breakdown of your indices and your groups is very important, Brent.
Yes, and this is a good way, by the way, everybody. A lot of times people will have the question, well, I want to see what stocks make up a particular sector. Well, it kind of depends on, of course, what index you can do. And you can change that just on the left where it says indices. And you can see Kevin selected Russell 2000 there. So you can see the stocks. You can see the number of stocks. So if we were to click on the NASDAQ, in fact, do that real quick, Kevin.
Let's do that. Yeah, let me bring back, we'll go into the visualize here. Go to the NASDAQ 100.
If you look at the NASDAQ and you look for financials, where'd financials go? I guess technically there's like the bottom right there, and so, but you can see how big. I mean, IT is half of the NASDAQ representation. Communication services is another like 25% or something of that. So you wonder why, the NASDAQ is doing one thing and the Russell looks so different. Well, look no further than this. You can see this. Whereas when you go to the Russell, and you can go back to your other chart there if you want, Kev.
Let's look at it today. Just looks a little different, is all I'm saying.
Yeah, it does look today a little different. But yesterday, I mean, it was stunning the number of banks or financials that were green. But you can see financials, a lot of little dots there on the financials there, a lot of little companies there. In fact, when the market was struggling, and there was a lot of concern about, say, regional banks. We heard, for a while we were talking about regional banks and their exposure and their health and their debt and whatnot, their balance sheets. We were referring to those regional banks and you could see those right there. A lot of little companies there, because of course the size of the box is correlated to the size, the market cap of the company there.
Yep.
And you can see that right there.
And again, we should just point out, I hope you noticed that as I clicked it, everybody, it just continues to open up the tree. So if
Yeah.
I want to look in the financials exclusively, I can do just that. And if I want to look into banks exclusively, I can do just that. You
Yes.
can keep opening this down to the level you want of the industry, the sub-industry group, keep on going. And you know what else? This is once again a way to educate yourself on the components, the individual companies within these individual industries, sub-industries, etc.
Yes, and you click back on financials there, just
Sure.
above where you're at there. Look, one thing to point out, not all, it's not a monolithic whole. This is not homogeneous. Look at insurance and how they're doing as compared to banks. You see how
Yeah.
red insurance is? So insurance is not, loving the move, whereas banks, hey, a lot of green there. And so you can kind of break down sectors and view them by their component parts as well on that.
Yeah, absolutely. Okay, well, let's see here, Brent. That was a good discussion around the Russell and why we might be seeing what we're seeing here. Let's look at what's going on with the semis. Yesterday, the semis took a little breather, but Brent, they have been absolutely rocking here. We've got into my band of resistance finally. We hadn't really seen it since late December, early January, maybe a little bit in early February, but it was a clear rejection. We've made a new short-term high. In fact, the highest high we've had here dating back, oh my goodness, did we hit basically the gap level? Pretty darn close to it from last July, Brent. So basically the highest we have been in almost a year. Still holding the 20-day. The trend still works in here.
Yeah.
Maybe just set up for a little bit of a breather. But your thoughts here?
From a technical perspective, I think the jury's kind of out. Are we going to slip back into that band, so to speak? Because that could be kind of an area of a channel, if you will.
Mm-hmm.
Looks like we peaked out about above it a little bit, but we've dipped down a little bit. We're right at the top of that. Or if we get a bounce right here, that is, that's a strong sign. In fact, that's what some people will use as kind of like an entry signal sometimes, in terms of, hey, it's extended itself. I want to get in, but I worry it's a little bit, overextended. They wait for a bounce and possibly get in there. And by the way, so this SOX index, if you were to look at that and you were to compare that to, say, NVIDIA, what you'd see is they look very similar, by the way, in terms of the trend up, the flag pattern, the little pullback we've had after an extended up. Probably not a coincidence. Obviously, NVIDIA is the biggest component here of this index. So, anytime you're looking at, say, a sector or an industry group or an index like this, and you're going, well, I can't trade this directly. I'm not really interested in options necessarily, or I just want to buy. Well, yes, there's routes you can do for that. You can go the ETF route. We can't cover. We're not going to cover in this class, but we do have a class on ETFs Monday, 4 o'clock Eastern time, if you're interested. Or, some people look at funds. And in fact, if you're a little bit more on the newer side of things, we have a new webcast. Do you guys know that? We have a new webcast. And I'm going to have Scott in the chat put a little information on that webcast, on how we can access that webcast. But it's getting started with stock investing, I think is the name of it. If I'm not, correct me if I'm wrong, Kev. There,
you nailed it.
And it occurs on Mondays, and it's a great look at investing. Different ways of investing. Now, I got a little off track here, but let's go back to the SOX. If you are interested in a particular sector or something, sometimes what you can do is you can look at individual stocks, bigger companies that make up that index, and that's what that's kind of what I was pointing out here, the similarity between NVIDIA and the SOX there.
Yeah, and you can even go back into, something like technology, for example, and start playing around in here to find your semiconductors if you wanted to see it. Remember, you're going to have large cap S&P 500 tech semiconductors. You're also going to find them in Russell 2000 as well. You just might need to open up your tree to do it, everybody. So you can find these individual spaces, or these individual companies rather, pretty quickly here through Thinkorswim. You can also do this, of course, through Schwab.com if that's your preference. But nonetheless, plenty of opportunity to dig in here if you spend the time. That much is true. Brent, I thought here, let's see how are we on time. Okay, I got about 15 minutes left. I wanted to hit up some detailed components because there's some trends that are moving and things we haven't talked about in the last couple of weeks. And so according to my notes, we have to look at a couple of them. How about oil? So the oil chart is intriguing to me because of what appears to be a bit of a foothold maybe put in over the last week here at that $64 level per barrel. What are your thoughts here about what we see? This looks like a pretty solid ledge for support.
Yes, we've had strength. And of course, oil is very, very dependent upon geopolitical news. And that can certainly affect things going forward. And that certainly the most recent spike we saw was, the kind of the escalation of the Iran-Israel issue and then the subsequent pullback as they kind of have this ceasefire and things looks like, the Strait of Hormuz is, open for now and whatnot. So that can certainly affect things. But from a technical standpoint, jumped up, came back, and bounced off of potential support. And we had that confluence of support between the 50-day and the potential old resistance becomes new support is kind of how we view that.
Exactly what I was thinking, Brent. And, if nothing else, we have a level under which we know or we feel as though we could start talking about further disinflationary detail associated with the market. If we fell through that 64 ledge, Brent, here, that would be a wonderful development, at least from that inflation standpoint. We know that oil rising is inflationary for the overall market, but I thought we could look at that. I hope that was helpful, everybody. Briefly, let's also hit up gold. Gold has been in a bit of a consolidation. Now, we have traded below the 50-day moving average on gold, which seemed like a little bit notable. Got a bounce yesterday. But Brent, are you at all surprised that we got that bounce coincident with the sell down in tech and the reminder that maybe we had been a little too much hating on some of those laggard groups that got the bounce yesterday?
It's always sector rotation. It's always money flow rotation here of where's the best place for money. And so when people are very confident, and this is a generalization, but when people are very confident and strong, feel strongly bullish about the market, we tend to get more flow into sectors like IT or communications or discretionary or industrials, things like that. When people are more worried about the market, they tend to go into certain sectors, maybe staples or utilities or something like that. But they can also go to different asset classes. One of those asset classes, if people are a little bit more worried about things, can be gold. So probably not a surprising correlation there between, a little sell-off in some of the little less confidence in some of the, more cyclical sectors like IT and a little more money moving into gold, which is what we saw yesterday.
Yeah, again, kind of a safe haven trade. It's been working for a while. We've got below the 50-day, and a day or two below the 50-day is where some traders feel most confident stepping into a bullish trend. It remains to be seen if we've got more upside from here, but it is a zone where some traders may look to expose some money. The other one I wanted to hit was copper here. And the reason is this move today and the one we've had in the last week. Brent, this is not a negative when I start thinking about how it relates to the health of the global economy, though.
Correct. Yeah. Copper is like the consummate industrial metal. And very often people will look at it as kind of this proxy for global demand of not just copper, but global demand of of production and manufacturing, and that's what we're seeing right here on this. That's a bullish move. It's also a little bit kind of almost like a mini flag that we had there. The strong move up on that was like big gap move, and then couple down days. Today, back up 1.5% or so. Nice move, continuing up. We have a high on this chart in March. I don't know. Is that a target for us?
It's a possibility. I would suggest a possibility, as always. We talk probabilities here, not certainties. That's our big takeaway in this class. But yeah, an area to monitor. But again, a reminder: if if copper is moving to new highs, if the small caps are breaking out, that is anti-recessionary conversation, and that's a good reminder for us, Brent.
Yes, and that is a good reminder, and that's ultimately going to drive the rest of the market too. Is just the overall economy. I mean, over the short term, this is kind of the same as the whole fundamental technical discussion on things. We can talk about fundamental analysis of the stock and technical analysis of the stock. We can talk about overall global economic health and what indexes are doing. There's not necessarily a one-to-one correlation over the short term, but over time, a stronger economy tends to lead to better market performance, or sometimes we say vice versa because the market tries to anticipate what the economy is doing. And same thing with stocks. On the individual stock level, sometimes the technical is trying to anticipate what the fundamentals are saying, but the fundamentals and global economic health, those type of things can be slower moving, slower to realize. And if you try and correlate that to index performance or individual stock performance, sometimes over the short term, they tend to lose track of one another almost, it seems. Mm-hmm. But over the long term, what we want to see is global growth and U.S. economic performance that should help the overall stock market performance.
Exactly. Well said. I like that. Now, the last one we're going to look at least from the side of the futures quotes, at least, is in Bitcoin, because the pattern is notable to me, Brent. We have been setting up in this channel for the last couple of months here now, and allowing traders to kind of get their feet back underneath them, because we've made big moves here in Bitcoin. But it looks like there's a dabbling trade here as we speak, as we are trying to break out of that downtrend line. And if we get outside of that downtrend line with today's action, tomorrow's action, Brent, you're going to see bulls start to get vocal again here on Bitcoin, I'm afraid. And I don't mean I'm afraid, but that would be my expectation.
That would be my expectation too. I mean, we've had there's not much in the market that generates as much excitement. No, this isn't good or bad. This isn't a recommendation, but there isn't much in the market that generates as much talk or excitement as Bitcoin. And it's had a little bit of a lull here the last month or so, but a break above that level, yeah, you're going to start hearing about it more. And so that'll be interesting if we get that.
It would. Of course, the opposite end of that, everybody, is a close below the 50-day. But you can see the 50-day resides at 103,634, just a couple thousand points away. But the action right here kind of highlights that there's appears to be a desire to break out of this to the upside. We'll see if that comes today. I mean, this is a wonderful candle if you're bullish today, given yesterday's action, the pullback and the close at right on the 20 or below it. So, the fact is it hasn't broken out yet, but a breakout could be significant on Bitcoin here. There's a little bit of enthusiasm as it relates to the overall risk on nature of the market here. Brent, quickly, I wanted to move through the leadership groupings. Here's energy kind of stuck in this channel still, but not really given a clear delineation at this point. Materials had that big move yesterday. It's the highest we've seen materials dating back to last December, which does seem notable, but also, defensive in nature to a certain extent. Industrials continuing to provide some leadership. Consumer discretionary a little bit sideways. Yesterday's back and forth between the president and Mr. Musk kind of weighing on discretionary collectively. It certainly weighed on Tesla individually. Staples, a little bit more sideways. Healthcare got the breakout a little bit yesterday, but you know what, Brent? I think I'm seeing that even though we've had this great move yesterday, it wasn't giving us an immediate follow through just yet. But Brent, there's some positive on healthcare with the 20-day crossing the 50 to the upside. We might be looking at a new trend here.
Yes, that's seems like trends are changing. This was clearly a downtrend, and in addition to those moving averages, I think you could draw a diagonal line down there off your, depends how you draw it. You can draw it different ways, but yeah, that's probably how I would draw it there, Kevin, trying to hit the most points that we can on that. Clear downtrend, but since then, higher lows, higher highs. That's a sign of a trend change on that. That's a good thing.
Yeah, we'll see if that maintains. The fact that you've got this inside day, a bullish inside or a bullish harami at this point today is not a negative either. The fact that we opened lower in the day is okay if that halfway down yesterday's action is held and it starts to move back higher through here. That's going to look pretty bullish for healthcare collectively. Let's see if the financials are. So we talked about it. We got the breakout in financials yesterday. Yeah. We could draw a line through horizontal ledge here as support, but ultimately you're not going to look at this as bearish given the move with an RSI making a new short-term high as well. Tech looking strong. There's a bit of a bull flag in that regard. Again, holding the 20-day back to the same date, Brent, April 23rd. So you're really struggling to find groups that aren't working here. If we get a bit more, see, even communications is setting that bull flag, broke that bull flag at the 20-day, went higher. Now, communication stands out because we did make a lower high in the RSI, so we might need some consolidation over the coming days here. But ultimately, what I'm getting at, Brent, is that feels and looks from both price action and narrative, this is not a market led by two sectors. This is a market that is broadly moving higher across all the 11 sectors. Let's eliminate energy at the moment.
Yeah, that goes back to the chart Rachel's chart that you showed earlier here.
Yeah,
in terms of just the market breadth, and ultimately, I know a lot of us may go, well, I don't care if as long as the market's going up, as long as the S&P 500 is going up, I don't care how much breadth there is. Ultimately, breadth is a signal of overall economic strength, and that's what we all want. So market breadth is a good thing.
I agree. And then, Brent, to round things out today, let's talk about one stock this morning that got an upgrade, and that is Apple. I posted about this earlier in the week because I've been watching Apple for a while. I don't know if you guys are watchers of one of the biggest stocks in our marketplace, but I surely am. And one of the things that I had noted, Brent, was that if I put on some Bollinger Bands here, let me incorporate my simple moving averages with Bollinger Bands. Check this out. We had been at the tightest we had seen. I probably visualize this better, not with my RSI, but rather with my Bollinger Band width study. So I'm going to add that down below and make sure that study stands out. Here we go. So check this out, everybody. The thought process on a Bollinger Band squeeze is that when the width of the bands is as tight as it's been for the last 6 months or greater, then you can expect volatility to join the trend. Well, that's exactly what we got here with Apple. And granted, this is luck for the record, everybody. But when I pulled it up, I noticed that these bands were the tightest they've been in more than a year now. And we would expect volatility. What we don't expect is directional volatility. We don't understand or know which way that volatility is going to lead us. But in this case, it's given us bullish breakout. Jefferies upgraded Apple today to hold from underperform, new price target at 188, up from 170. This is not a negative, Brent. And the reminder can be that if you monitor the market close enough, you can locate these opportunities for volatility coming back to join the market here. And that's exactly what you've gotten out of Apple this week.
Yeah, I'm glad you brought up the Bollinger Bands and the Bollinger Band Squeeze because, there's a lot of different approaches to the market. We're not advocating any one approach here. Sometimes at the beginning of the webcast, we always say, technical analysis is not the sole means of investment research. But even within the realm of technical analysis, there's a lot of different approaches in the market. And I'm glad you were able to highlight the, a squeeze on the Bollinger Band as a potential way of trying to find breakouts that, some traders may find of interest.
Exactly. That's all we're doing, everybody, is we're looking for possibilities. You all know that if you watch enough charts, you're going to make enough assessments and set your theses, and half of them are going to go your way and half of them are not. And that's just all the process of trading and investing alike. So set those ideas, build your theses, give yourself a plan, and then try and stick to it as best you can. Brent, we'll wrap it there. It's been a really good, wide-ranging conversation today. But as always, I love having you on a Wednesday. Thanks for being here, man.
Thank you, Kevin, and look forward to doing it again next week.
As do I, and thanks to all of you, everybody, for being here. Big thanks to Scott Thompson in the chat. Remember to follow the three of us on X. Hit that thumbs up button down below if you like the conversation today. That'll help us as we get this out into the archive for you all a little bit later today. But don't forget to keep it tuned right here to the Schwab YouTube coaching channel. We appreciate you joining. Have a great day. We'll see you again real soon.